In this presentation, we will continue on with our comprehensive problem related to nonprofit, not-for-profit organizations. We have the information on the left side. We're entering that information into the blue area on the right side. In prior presentations, we had gone through the transactions for a time period. We then allocated the expenses to categories. We did the closing process, and then we did the balance sheet, similar to balance sheet type of account, the statement of financial position. This time, we're going to continue on with the financial statements, looking at the statement of activities. Statement of activities, similar to the income statement, it's going to be down here in cell T49 is where we are starting. You'll recall we've got kind of three trial balances that we've kind of looked at here. The first trial balance we had up top was breaking the information out by expense category, as we would normally expect it to be in a for-profit. Then the second trial balance, the one we are working on here, the one that will typically be used in order to make the financial statements as we are making now with the statement of financial position, is now breaking this information out by category, reallocating those expenses to the categories of public health, education, community service, management and general, and fundraising. So this is what we're going to use at this point. We're going to make our statement of activities, in other words, with regards to these categorizations. Then we'll make another schedule that will show the broader groupings information, which will be similar to the schedule we have here that we broke out up top in a prior presentation. We'll use this to make another, schedule to add to our financial statements or to the footnotes of it. Okay, so now we're going to go back down. We're going to go to our statement of activities similar to the income statement, and we're going to go straight through it. It'll look much similar or much the same as an income statement, although the accounts will be different given the fact that we have different kind of names for, say, revenue accounts. So we're going to say first we have contributions. We're just going to call them contributions. Now, you might say over here, this is where it gets a little bit tricky. You'll note that we have contributions with restrictions and without restrictions. Now, instead of just having the two separate accounts, we're actually going to break this information out by column, which probably it's going to be a little bit easier to look at in that format. So now we're going to say the items without restrictions are going to be in this column. The ones with restrictions will be over here. Therefore, we only need one line item saying contributions. Then we can pick up the one with and without restrictions. We're currently in the column for without donor restrictions. We're going to say negative in order to flip the sign. And then we're going to scroll up top, and we want the one without donor restrictions, the 237,000. So there's that. And then the one with donor restrictions, I'm going to say negative to flip the sign because we don't want credits in our statement of activities. That's going to be this one. So there we have that. We found a home for these two. I'm going to go ahead and highlight these as we go. We could then, of course, sum these up, and that's going to be the total. That's going to be our total. Then we're going to have net assets released from restrictions, satisfaction of purpose. And the reason we have this here is because this is going to be that releasing item, which is going to increase the without restriction. This is kind of like an intercompany type of transaction, you could think of it, or like a fund type, one fund to the other type of fund. You can think of in that format if you so choose. But what we want to do is we want to show the increase in the without restriction item. So that's going to be with these two accounts. So we're considering these two accounts here, and we're gonna pick these up. So the one without restrictions is a credit. And so we want to pick that up, and we want to make it a positive number in our worksheet. So it should be an increase over here. In other words, here it's represented as a credit. So this gets a little bit confusing to think about this, because over here it's a credit. It's increasing with a credit. Over here we want to show the increase with a positive number. So therefore I'm going to say negative of the credit to make a positive number. And then this one with donor restrictions, that ties out to this debit balance, the one with the restrictions. Over here, it's a debit balance representing kind of like the income statement account going down, because we're making this kind of income statement like account go down and this one go up. Over here, we want to represent it going down with a plus and minus format, and therefore we want a negative number here. So this isn't a credit, it's a negative number. So I'm going to say negative of that number to show here it's a negative sign. It's a negative sign, negative number. So I could be a little bit confused. The net, of course, between the two of them is 0 because it's kind of like an intercompany type of transaction, an interfund type of transaction. It's going from restricted to it's going out of with restrictions to the area that is without restrictions. Okay, so that's going to give us our total revenues and other support. Total revenues and other support, which we will then sum up equals the sum of these two. And we can copy that across. I can autofill. We can autofill that across. We have now found a home for these two. So those two have a home. So that's good. That makes us feel good. Next, we're going to go to the expenses. So next we have expenses. So we'll say expenses colon. And we're going to pick up the expenses up top, which are going to be included. No, notice we closed them all out down here and we put them into these categories, which is the public health and education. So we'll pick that up, and these are all going to be without donor restrictions. So we're going to say this equals the public health and whatnot. So that's the 128,504. Next, we're going to have the one right underneath it, and that's going to be the community services. So community service, and this is going to be equal to. We'll scroll up to the community service program. And then next, we're going to have the one underneath that, which is going to be the management and general. And we'll pick up the number for that one as well, the management and general. And then the next one is going to be the fundraising. Fundraising. Going to raise funds. And that'll be this item. So there we have those, and we could sum those across. There's going to be nothing in the with restrictions, so we'll say sum this way. Oh, actually equals sum. Have to have the equal sign to make it work. And then we'll copy that down. So we'll copy that down. And then we're going to say this is the total expenses. Total expenses. And we'll sum this vertically now equals the sum of these. Those are our expenses now. It copied it across for us, which is nice. I'm going to underline this one because I got rid of that when I auto-filled it down. There's an underline to pick that up, so it makes it look good. We want to make it look nice here. And then we've got the increase in total net assets, which you can call kind of like the net income type of number. Increase in total net assets. Sounds funny. When I first used to hear that a long time ago, I thought that's kind of a funny sounding thing. But notice that's in essence what it is. The net income is an increase in basically equity. So they're saying this is an increase in kind of like the equity similar account, which is net assets, increase in net assets, net income kind of thing. Okay, so it's going to be equal to the total revenue and other support minus the 321,260, which of course is the expenses. We can copy that across. So I'll copy that across. So that we pick up that middle number. Of course, there are no expenses down here in the middle number, and there we have it. Now we're going to basically tie this out to kind of like the equity section by giving us the beginning net assets, the equity section being kind of like the net assets, and the beginning without restriction. Now you'll recall this is going to be similar to a for-profit if we were making the financial statements. The beginning balance is basically where we started at. So that's going to be this number. If this was like retained earnings or capital for a for-profit organization, this would be whatever it is before the activity of the current time period. Therefore, the beginning number, nothing would be posted to it unless something kind of unusual happened where you posted something to kind of like the retained earnings or capital account. In this case, nothing was posted to it, and it was the first year of organization. Therefore, the beginning numbers are 0. So I wanted to pick up the first one, which is without. So it doesn't really matter. They're both 0, but I'm going to pick up without. I got to get the right 0. I want to get the right 0. And then the next one is going to be with restrictions. And that's going to be this 0, not the other one. Okay, so they were 0. And obviously, we'll take a look at a problem later, which isn't the first time period of operations. And there we would have a beginning balance in the equity. So then the equity total is just going to be the same as the increase in the net assets. So there we have that. And so there we have it. So that's going to be our information. And of course, if we consider this information, actually I should have the ending net, this is the ending net assets, to the balance sheet, this will help us out with the balance sheet, which again is why a lot of people will do the statement of activities or the income statement type of account first before the balance sheet, because you'll see that these two balances should be these two balances, and this balance should be that balance, which keeps us all in alignment here. So the numbers we want to check, of course, to make sure we're okay, just like normal financial statements typically, was that assets equal the liabilities and net assets, and the equity section here in the net assets broken out between without donor restrictions and with should agree to the ending numbers that we have on the statement of activities down here. Now, the next thing we're going to do is going to be the statement of cash flows, and we'll look at the statement of cash flows using the kind of like the direct method and then reconciling with the indirect method as well.